analysis of today's action. Let's broaden out the conversation to include the rest of the world. Joining us from Shelton Capital Management is Derek Izuel, who's the Chief Investment Officer. Derek, I know you've been watching the dollar, how it connects to some of the global themes. So let's maybe take it back to this morning when we were reading articles about China's Evergrande and the potential for real estate blow up. Is that something that should be on the top of our list as both domestic or international investors?
Well, certainly China, the prospects for equity or other returns in China are fairly bleak right now. I mean, all these things we're seeing in their real estate sector are just symptoms of broader issues that this country has. And one among the increasing amount of debt in the country, deflationary forces they're experiencing post opening up from their COVID lockdown, and the demographics, which is probably the biggest drain on the prospects for Chinese growth. And so, the real estate's just the symptoms. There's a lot of big issues in that part of the world.
How do we view that right now as a force compared to all this surprising strength in the U.S.? Do they offset each other? Do we get to lead the way because we're a little bigger GDP? I mean, how does that work? Because here the conversation's about yields blowing out and the risk of inflation coming back because the data's been so surprising. But then they can't get their act together over there. Do these forces bounce off, or what's the net result?
Well, above and beyond China, there's a lot of prospects for some solid returns in emerging markets, even relative to the U.S. I mean, emerging markets really have not gone anywhere for 10, 12, even close to 15 years. And thus, they're, on a relative basis, they're really cheap. But you point out an important point, the dollar. If the dollar is to weaken from here or continue to weaken from some of those October highs that we saw, we should see emerging market equities do extremely well. The weak dollar was what propelled emerging markets through their last bull market, which was, of course, more than 10 to 15 years ago. But it went on for some 5 years, and emerging markets outperformed developed markets substantially during that time period. So keep an eye on that dollar, because that's the big catalyst for an emerging market move above and beyond China.
What do you think the dollar move here, the strength means in terms of our central bank relative to the world's central banks? The dollar collapsed last month, right when everybody was talking about the Fed's cycle being over. And now it came right back to where it was, basically, in mid-July. What does that mean? What's that telling us?
Well, yeah, the dollar is... It sold off after the October highs and has sort of been back and forth for the last 9 to 12 months or so. I think the key is watching those central banks and the extent to which they drive relative interest rates. Obviously, we've got the Fed in the middle of all that. And in general, the take on rates has been, we're getting close to the end of the rate hikes overall. Meanwhile, you see overseas, you look over in Europe is still, they're farther behind us in the rate hike cycle. And probably even more importantly is Japan. And Japan has been holding rates down for many, many years. And yet both in November and then just recently here in July, the Bank of Japan has expressed the fact that they're willing to start relaxing those forces and we're talking 20 basis points at a time here, but that's a big deal in Japan, letting those interest rates in Japan go up because they're experiencing inflation as well. May not seem like much, but on the margin, there's a lot of U.S. bond buyers in Japan. If some of them stop buying as many bonds in the U.S., expect to see the Japanese yen strengthen and perhaps be the leader of the dollar weakness we're talking about.
How come it hasn't happened in the last couple weeks here when they actually made this move? I was getting alerts on my phone at like midnight when Japan widened out that yield curve control. Bloomberg, everything I subscribed to in the morning, it was all over the headlines. Dollar went up. It's been up. So apparently it was a big deal and maybe a surprise, but how come the dollar's rallying through that?
Well, I think that while there's been a lot of anticipation in the news media of it and every signal that was going on, I think there was some smart money behind the scenes that really knew that this was the month that the Japanese Bank of Japan finally made another announcement that they would relax things. It's been speculated every meeting they've had somebody had a good idea that this was the meeting they would say something, and we'll start this whole cycle again where the pundits or the market out there will be thinking they're going to continue to relax these constraints, and then we'll start to see the movement in the dollar ahead of time. So yeah, markets anticipate things like this, maybe a little earlier than it gets to you and me.
Got it. Tell me about the idea behind your guys' strategy right now. As I know your focus in the EM world, EMSQX, the fund. What's the big constituency in there right now? Is there any regional bias that's emerged, any sector or theme that's making its way through that strategy?
Sure, we've made a lot of nice returns from the technology sector in emerging markets. A lot of the tech companies in Taiwan, everyone's familiar with Taiwan Semiconductor, been a good stock for a long time. There's some other smaller Taiwanese and Korean companies that have been great. But we're starting to shift more to Latin America. As we see the forces of globalization ease and a lot of developed market companies pulling operations and manufacturing back from China because it's getting expensive, they're concerned about the volatility over there. Particularly the U.S. companies, Latin America is a great destination for that. Still inexpensive, but much more politically secure, much closer. And so you're seeing some really solid strength in Mexico and Brazil, as well as some of the other countries. And we've been participating in that as well.
Do you want to see anything in particular on the inflationary front? Derek, last point, are these areas that would enjoy commodity prices rising again? What is that kind of macro connection for that particular subject? Is there a lot of ties into that kind of inflation cyclicality?
Yeah, absolutely. Inflation, not only would it be at least some steady inflation or higher inflation would be good for emerging markets, but also particularly for the non-Asian emerging markets that have a bigger commodity focus. And so if that is the case, if we do continue to have inflation, expect to see within emerging markets more performance from Mexico, Brazil, Latin America, South Africa, places like that, and less performance from, say, Korea or Hong Kong or China, which tend to be have more of a technology and manufacturing focus than necessarily a commodity focus at this point of the cycle.
All right. Fun combo, Derek. Thanks for keeping us balanced here. Our attention needs to sometimes get a refresher of what's going on outside the U.S. focus. And I always like the EM talk. Appreciate it. Derek Izuel, Shelton Capital Management. All right, as I mentioned, EMSQX, the fund. Coming up, let's talk some software, and let's continue the conversation with the CEO at PubMatic after shares got hit on earnings. Revenue over the past year, roughly around flat. We'll talk about the latest here in the plan going forward.